Welcome back, you're watching Storyboard. The Interpublic Group or IPG has had a good year with full year revenues growing at almost 4% to touch $7 billion. The group, which currently ranks second in the Indian market behind WPP, has been on an expansion spree with several digital acquisitions in the past couple of years. So what is the group's plans and where do the opportunities lie? We met IPG CEO Michael Roth for the answers.
Thank you for speaking to us.
My pleasure.
And welcome to India.
Thank you.
So begin with your prognosis for 2014-15. What's happening in this business?
This business is actually, we see growth in this business in 2014. We're anticipating organic growth in the range of 3 to 4%. And we're expecting for 2014 to expand our margins by at least 100 basis points.
When we talk margins, we're still talking basis points. It's that small. What I'm provoked to ask you is this a commodity business now, even the creative side of it?
No, I don't believe it's a commodity business. There's no question that there's a lot of pressure in terms of our clients asking us to add value in what we do. But in fact, we can show that both creative and experiential and all of our different disciplines add value and we move the needle. And when you can show performance and return on investment in terms of what we do, that's how you counter a commodity business.
But having said that, you look at the consultancy business where they're paid mountains of money for relatively smaller stuff, and they'll take work that you've done, say your McCann Australia stuff, which solved a social problem, not just something commercial. But yet you don't get the recognition that or the fees that consultants seem to get.
Well, it's two. You may not get the fees. For example, you're referring to the award-winning Dumb Ways to Die.
Absolutely.
In Australia. Now, it may not have been a big money-making proposition for us. One, we did a tremendous amount of social good. But two, reputationally, it shows the power of a creative idea and the power of bringing it to fruition through activation, social media, distribution, and it's clear that it had a tremendous impact on what its goal was intended to be. And it's those kind of experiences that prove to the marketplace that we add value, and when given the opportunity to bring all those resources to bear, we can in fact make a difference in terms of our clients' wish to reach the consumers with their products.
What is the point in creating so much of change when you're not recognized monetarily for your contribution?
Well, we recognize for it. We structure compensation arrangements, particularly on the media side of the business, that have a pay-for-performance component to it. And frankly, that's an important way for us to continue to grow margin in this business, is to be accountable for what our clients are asking us to do. And if we deliver on that accountability, then our margins will grow and it will continue to be a profitable business for us. And that's a reasonable ask on the part of our clients to prove that what we're doing adds value.
So how do you deal with procurement, which is now growing all over the world?
Procurement are brought to the table to just make sure that our clients are optimizing our efficiencies in terms of meeting their goals. We work very closely with procurement. We focus on what our margins are. And frankly, in many occasions, we use a pay-for-performance model to overcome some of the issues in procurement.
Right.
And that is, there's a certain level of margin that clients are willing to pay. But if we move the needle addressing specific requests from our clients, then I think it's appropriate for us to receive additional margin through the pay-for-performance model. And I think that's a fair ask.
Coming to India a little more specifically, you've had a tremendous amount of interest in India by all the big daddies and a lot of investments in India,
yes,
especially in digital, experiential, and PR.
Yes.
Lots of money's gone down. And on the creative side, there's hardly any agency worth buying. Now, Low's been kind of out of that sort of race for the last, not Low, IPG, for the last few years.
So I don't see why you think we're out of it. In 2013, right here in India, we acquired Interactive Avenues, which is one of
Sure.
the best-in-class digital agencies in India.
Sure, sure. No,
So
other
that
than
was a
that,
transaction.
yeah.
In the beginning of 2014, Lowe acquired Profero, which is a global digital agency. FCB Ulka acquired Inferno, which is a creative agency in the UK. Here in India, our PR business, Weber Shandwick, acquired the rest of Corporate Voice. So we've been very active on the transaction side of the business. We think, in particular in India, it's a vehicle and an opportunity for us to grow existing global networks that we have here in India, which is one of the reasons we brought our board of directors here to India to see firsthand the strength in this marketplace. We're the number 2 holding company in India. We have McCann, we have Lowe, we have FCB Ulka, we have Media Brands and Weber Shandwick, all servicing both local as well as multinational clients. And our growth in India has been very impressive. In the last 4 years, India has grown roughly 70% on reported revenue. So those are the kind of markets we like to see. And the message we gave our agencies by bringing our board here was that we view this as a growth market and we will continue to invest behind them.
Now that you've spent a bit of time here with your
Yes.
board, and we wanted all of you to see what opportunity India afforded. So what are the opportunities that you see?
I think there's tremendous opportunity here. I think our presence in the marketplace as a result of our agencies and our talent is second to none. Our creative talent here in India is award-winning worldwide. In fact, we view our agencies in India as a creative hub that we reach into on our multinational engagements, and we tap into the creative expertise that we have in McCann, Lowe, and FCB Ulka. We see growth, we see a rise in middle class here in India. The growth in population, as you know, over the next years, will create another India itself in population.
Right.
Well, when you see that type of growth and the rise in the economic environment, that's where we can see very strong growth, and we want to invest behind.
Right. Another issue about India is, while you have a lot of assets in India, a lot of brands in India, they don't come together as a network. How would you react to that statement?
I think that is changing. I know that it's changing. In fact, last night with our board of directors, we had the heads of all of our networks here sitting together, talking about collaboration and opportunities where we can leverage each other's expertise and our client base. And that's how we grow our business. Most of our growth at IPG is from our existing clients. And the way to do that is to make sure you're giving them the best IPG offering. And we have to be able to reach into other agencies to bring that talent. If you look at 2013, we participated in 4 pitches, if you will, that required an IPG solution. Of those 4 pitches, we won 3 of them. And the reason we were able to do that was we were able to offer a seamless integration of multiple agencies and disciplines focused on meeting the needs of our client. That's what we're seeing starting to happen here in India, and that's what is going to be necessary to compete on a worldwide basis.
And what you're saying is almost like what John Lennon and Maurice Levy might have said about Omnicom and Publicis
Well,
getting together.
you know what? Well, the reason is because it happens to be the truth. It's helpful to do that.
Anyway, the final question. Where does POG go from here? What's your take? You had a very strong view that it didn't quite matter. So,
Yeah, well, it always matters. Whenever you have competitors who are getting bigger, it matters. But frankly, it hasn't happened yet,
right.
And it's taking its time.
Right.
Whenever something takes that long, there's disruption. So we're seeing an amount of opportunity in recruiting individuals because they want to be in a more stable growth environment like ours. It's going to take a number of years before that integration takes place. That will offer some confusion in terms of client servicing. We view that as an opportunity. And of course, there's the ultimate conflict question. It hasn't happened yet, so you really haven't seen the fallout that a lot of people were talking about, because the clients right now are waiting to see what this means, what it means in terms of what they're going to be presented in terms of cost, what it's going to be presented in terms of their offerings. And until they see that, our message to our people, and certainly the CEOs of multinational clients that I'm meeting with, their message to me is keep your head down, focus on what you're doing, and that is our business, and continue to offer the best you have, and whatever happens with that merger will happen. We have enough scale, particularly on the media side, to compete effectively against all of them, and including WPP. And we've done quite well in 2013 against that. And right now, we're sitting back and doing the best we can with our tremendous client base, and we'll win business as it comes up, and we'll convert it to profitable margins.
Finally, next time, when are you coming here next, and what will we see different in India?
Well, I hope to. I'll come back relatively soon, and what I hope to see is more collaboration among our agencies, the finalization of the election here in India, and more stability in terms of that environment, and growth opportunities continuing.
Increasing collaboration between agencies key for future growth. Time for another break here on Storyboard. Coming up ahead, Big Bazaar steps up its marketing game and how.